Hello everyone, welcome back to my YouTube channel. So today I'm talking about the part two of what are breaker blocks. This question, sorry, this has actually been requested several times on my DMs, and I thought of creating this and then clearing doubts on what are breaker blocks, part two, okay, and explaining into detail what I actually mean by breaker blocks. So if you want to check it out, you can check on Gold. I think where I'm using the example from, that is actually Gold on from 2019, January 2019 to May 2019. Okay, so January to May 2019. You can check it on Gold on the daily time frame for clearer view, right? So now breaker blocks are actually the other like they are just let's can I just say some kind of um they are other blocks, right? They are actually other blocks. The last down move candle before an up move, right? So let's say you are having a high, you have a high, a low, a high, a low, a high, a low, then a high. Then you come back to see another low. So now this next low coming comes to break this particular low, right? Creating um, a change of character. You might see like a break of structure in that sense, which I might say a change of character. Chalk, you might see in the smart money concept. It's just a term, not anything actually. So this particular block has been broken, like say this one right here, right? So this has been broken by this impulse. You can see it has been tapped, then rally down. So breaker blocks actually represents an area of rejection, right? It is an area of rejection potentially. So most of the times you see it being respected and being returned to the downside, meaning there is actually a rejection. So let's say you have a movement of price, like I said, up, down, up, then you see a break of structure. The moment it comes back here, maybe price actually finds this particular place as a potential area to reject off of, right? So you see both people actually put their their entries here. You see, so this is the breaker block. They can put it here or there. Then their stop loss above this. Then the target the next probably here or maybe something below here. So this didn't actually move further. So breaker blocks actually represents area of rejections in future. So let's say you can see with this one. Let me actually bring this right. I drew this some time ago, right, just to explain this video. So you can see from here we had a BMS, that is a break of market structure, and we had a supply zone, right? So the supply zone was being caused by this particular rejection right here, which is a breaker block. So a breaker block doesn't necessarily mean has to be a question window triangle. Just a question window triangle is just a head and shoulder, but let me say a slightly broken structure of head and shoulder instead of having a neck, right? So this neck is currently broken. So right now you see a head and shoulder. Sometimes you see an overextended. Okay, so I call this overextended head and shoulder. So I say you have a break, you have a high, a low, then a break of the higher high, right? So now that higher high counts to break the lower low, and then that lower low goes back, tapping into another block in the previous high, then taking its limits to the downside, right? So that is how question mark triangles are, or inverted yeah, or overextended head and shoulders are. So all these are terms. They are just little patterns for you to understand what you should be looking for in the markets of breaker block. So breaker block does potentially give you the opportunity to sell all the time. The times you need to keep clues as to whether to sell with that breaker block or not, right? So now you can see from this particular area, the breaker block broke the structure. This structure been broken. This breaker block was broken by this structure, and you can see how price came rejecting of price. So when price came and rejected off of it, it went by finding an order block, then was able to break back up. Okay, tap into the supply zone. Okay, which actually took price down, and then taking liquidity and then flying back to the upside. So that is a very perfect example. And you can see when you look at breaker blocks, for example, it doesn't necessarily mean that they are not strong enough to push price away. Okay, there are several examples I can show you from. So you can see from here you have an area here. This is, you can call it a breaker block. You will not understand because this is an advanced view of it. So when I go to the lower time frames, you see this as a breaker block because this area has turned into a question window triangle on the lower time frames areas like this are also cautionary triangles, but you don't see something like supply to demand areas. So like this, you can see this actually has tended to supply a demand to what supply areas. If I say demand supply areas, I simply mean um, demand has lost control, right? I simply mean that demand actually lost control, which means demand was here waiting for price to take this particular demand to the upside, but actually it failed, right, by get broken. So now this demand was weak, meaning the demand was weaker and allowed this particular trend to break the structure. So now when the structure is broken, you're now looking for what supply is to take price down. As said, when sellers are what in control, you sell. When buyers are also in control, you buy. That is how it is about breaker blocks and then simple supply to demand areas. So I can say supply to demand areas are just areas of position matters, right? Of, let's say, you see price has actually come to break this structure. Let me use highlighter, break the structure, and after breaking this structure, it found a demand area, actually another breaker block that has been found around here. So that one hasn't been broken, but after here, you see price was able to break. So right now, let me let you see some example right here. So after this particular demand area, you see, so this was a demand area that failed. So right now, if I was looking for sales, right, I would have been targeting this area. But what happened? Price came and took over, right? So after taking over, the price went up, came down, tapping into particular other demand area, and then flying over because the supply has been taken by demand, right? So if they say supply takes over demand, means that supply is no more in control, but demand is in control. So now the next breaker block I would like to show you is this one right here. So you can see the price went down, came back. Let me use a little drawing too. So price went up, came down with this particular little candle in here, doji, from the daily time frame. Now price went back again, breaking that particular structure and coming back down. So you can see when price was coming back down, it broke that particular low, right? So now after breaking that, what happened? You see price went back, okay, tapping into a breaker block. So now it's split to downside. So now let's look at the difference between the two breaker blocks, right? So we have one breaker block right here and the other breaker block around here. So I'll be talking about this video for part 3. Yeah, I'm just breaking this down a little bit for you to understand simple concept about breaker blocks. Okay. So now one breaker block is here and the other breaker block is here. Which one will you choose from? It doesn't necessarily which one you pick from because they're all relevant and they are all consistent, right? So you can see from here there was an imbalance left below, right? So you can see from this other breaker block, you can see imbalance left here. So meaning price has to fill this particular imbalance by tapping into this particular supply area. You call it when you are refining, you have to catch your refine to this place. They can be able to take this particular one as or sell buyers to get a low rate reward to this place, buying to this place, taking the particular breaker block as an opportunity and selling. So now what you do see, the important part of this is that anytime you see a candle creating a joint candle, like you see a candle close bearish, then another candle has another bearish candle continue. It doesn't mean there is no correction. The joint, okay, the joint here actually means that there was a slight correction on the lower time frames, then a push to the downside as continue. Just like your joint in your hands, you can see your elbow. The body has covered the whole body, the whole bone, so nobody knows that there is a joint in there. But when you open inside, you do see that inside your body there is what? A joint. Okay. So when you see a child and ask what is inside, if you like bone, you don't even know what you're talking about. But somebody who knows this will tell you there is actually a joint bone inside. He will specify and tell you the kind of bone that is inside, probably veins holding this and blah 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 and things. So that is same way it refers to forex. So now you can see from this particular area. Let me now clear my charts once again and show you what I want to say. So you can see from this area, you can see price came and did that same thing here. I mean, this is a particular demand you have not seen. So this is a demand area that got respected by what? So this is actually a supply rather. This is a supply area. It's a supply area that got respected by this particular price to push to the downside. So now, where was the supply area found? On a what? A breaker block. So now this breaker block was found on the supply area. Okay, this supply area was found with aligned with what? A breaker block. So now the breaker block will hold, and more to the point, there is no imbalance. When you look at, there's no imbalance in between the breaker block and the supply the supply area. So meaning the supply area was efficient to push price to the downside because it has covered all the imbalances that was left, and this imbalance was here was not actually valid because this particular one has actually been mitigated, and meaning that price will continue to mitigate because we are broken structure from here, meaning this particular breaker block was broken. And so most of you might ask, so why is that this particular breaker block where this particular demand area was not established? The question is, where does it come from? So you can see from here, you consider this as an impulse with correction impulse. Right now, you see that price has given you an opportunity to enter at a lower risk, right? So meaning when price was coming down, it created a slight correction for you to know that price is changing its momentum. Okay, so creating the momentum, it actually violated this particular demand zone, and then going back tapping into a supply area that you might not see on the daily time frame, which you see on the monthly, on the lower time frames, then probably push to the downside, tapping into this particular area of demand. So now the breaker block was actually broken by this particular rally drop base drop. So in supply to demand, supply and demand. So you can see drop base drop, right? So now this drop base drop has been respected perfectly. So when you want to refine it, you have to refine to this particular area, and the joint area takes over the refinement. Okay, so now the refinement actually in this, you can see price rejected from this breaker block. Initially, that's the breaker block you should be looking for. But when you are refining, you refine it to this particular one as it is the most recent one. So that is what happens. So hope you understand a little bit about this, and I'll be bringing back part 3, now explaining into detail how to take trades from breaker blocks and be profitable. So thank you for watching this video, and see you in my next video. Peace out.